at me and asking in another social media platform. If you don't know what my Twitter is, it's of course rocky_outcrop. Checking my notifications right now. I'm seeing that I'm not getting anybody asking me. I'm not gonna, but actually looking over here, I can see that we have got the XTZ team out there showing its support to me, as it so often does. Big shout out to the likes of course Castle Tez, and we have, you know, Tezos Ranger, Rosa, and various other folk out there in the Tezos community. And you know what, why not give back where the giving is good? Let's jump on over towards our friend Tezos. I'll in fact not use that list there. Instead I'll go to my all list here, where I have a few different options for the old Tezos McSchnezos as well. So thanks so much to everybody. And in fact, probably I would be remiss not to hit the stream marker area so that I know to come back to this area if I want to snip this out for us. Now, okay, cool, excellent. Bringing up the charts full screen, jumping up towards a decent time frame to look at the old Tezos here. We can see that the 618 golden pocket has of course been that profit taking target that we identified so well recently in the past with Tezos. Isn't it fantastic to see this happening time after time? Well, if you're trading this thing, then you're in good company, and of course as well you're getting good company in it around about key areas. We are continuing to move towards the top side. We are still seeing that the parabolic SAR is telling me to stay in my long trades at this moment in time, unless we see the prices coming back down this price point in here at around about $2.67. What else do we have in that area? 24-hour time frame. We also have the golden cross area right in at that zone. If we were to come down to this price, it would mean by the point at which we did that, we'd actually broken the 50 simple period moving average. So maybe keep an eye out for the 50 simple over the period of the next few days and see if we break that, then there's a good chance we'll go on to test the 200. In terms of just the structural look at this thing from a point of view of course the pitchfork ideology, we can see that of course the median line lines up with that perfectly as well, giving you a whole bunch of reasons to be paying extra attention to this area in the price action. But we are quite a way away from there. Notably at $3.04 or so, we can see that is where the 382 reside, the 50% Fibonacci resides, and that is, wait a minute, where is the 382? Because I can see here that it's not on that. This is which is what my subconscious. If you're wondering what happened, Rocky, how come you made a faux pas with your language there? Well, what I was thinking at the same time as speaking is, where is the 382? And seeing that perfectly lines up more or less, and I say perfect, you know, ironically. No, unironically. There we go. Even better. So I say it perfectly. And here with our median line of the parallel channel, all that good stuff, and it's coming in at around about 270. Wow, that would be the next best buy area if we see a pullback, like I said to somebody in the comments of the YouTube video recently. But we would need to be aware at that stage if we actually saw closures below it. It's not hard to identify this on the charts. It's very, very easy. In fact, we can see all of these bodies managed to close up above that area, and if we saw the price action descend down this way and then come here and get a body closure which actually breaks this area and then move on down the way again afterwards, you're looking at a very, very, very different scenario to simply coming down here, wicking, and then going off again on higher thereafter. What is that different scenario? And it's quite simply that we'd be breaking the previous low area for us on the price action in there. What color shall I make my arrows for the next 10 minutes? Make them yellow for the next wee while. So yeah, so we'd be breaking this area in here if that. Oh, I just undid the color thing. C'est la vie, say the old folks. Goes to show you never can tell. We would be breaking that structure for us, and that would be summer fruits, if you're asking. No, that would be, of course, negative, and then we could be seeing further problems for us. We'd have various different ideas, and there's something to be said for kind of looking at for patterns in it around about this section as well of the old price action should we see something like that happen. What do we see with this low here, having not had the same extension down the way as the previous lows? That last arrow was a bit much. If we'd actually seen, like we saw with the previous two lows, 1, 2, I really do need to have a better color though, 1, 2, then we would be looking at having tested the 50 simple period moving average. Now we didn't actually do that with our previous low, meaning that we came in for a higher low, which was great and everything, but of course price action narrowed somewhat, which puts even greater emphasis on that area of price. What we also see is that the 50% area, which we know is very key, lines up perfectly in terms of the structure that we have with the biggest nodes on the VPVR. Seeing a big drop off here right to this area where we have the next area of support coming in at. Again, want to emphasize it, if we come down here and wick down, touch it, jump away again, good news. If we come down here, get body closures down here below our previous structure, challenging this area with any degree of real gusto, that's bad. Do I actually expect that to happen? No, I'm just offering up a little bit of insight, because if we did see something happen with regards to this most recent movement, taking into account the last 3 highs, 1, 2, 3 in terms of that structure, and looking here between the last couple of lows, linking this in together means movements down past the wick of today is potentially breaking the structure on what could be conceivably a wedge in here on this one, giving you a movement potential, a movement potential for us, taking us down towards below that area. Now, what that would actually ultimately be in terms of the price action and with these highs and lows is all boils down to your perception of this area, because if you were paying close attention, I said 1, 2, 3 when I drew in that wedge, but really, is this a previous high? Is that really the previous high? How about we also ask, is this really the previous low? Is it really? Are we just looking at this as being the low, this as being the low, and coming in for a move down the way to put in our third higher low, overall resulting in having a channel towards the top side rather than having a wedge? Because if you watch this channel a lot, and it'll give you no prizes for saying what comes up next, you have a wedge, a move off a wedge. Bearing in mind that the 2 points here are the same, a move off a wedge often becomes a parallel channel. That's what you'd be looking at there. What do I want to see happen instead? Because that's your negative case scenario for you, and really it comes into, again, our previous high. What we need to do, of course, is continue to move towards the top side, and then we have really good targets up above. The first target for us currently resides in here at 382 or so. Let me just see, it's a little bit low, 382 or so, coming up here for our next target towards the top side if we do push on past this zone. Is that possible? Well, let me remind you as well that a wedge which breaks out could go in either direction. In a bullish market, you've got a greater likelihood of the less likely scenario of a rising wedge breaking towards the top side actually occurring. What we have here is, when we look back at the same time, more of a 50-50 case scenario, having had a trend and move towards the top side and then a big drop down. 50-50, you could say, on the 24-hour time frame, jump up towards the weekly, and you can take off all the drawings here and say that, yeah, I guess there's a bit of confirmation on that one for us. It hasn't necessarily had that on the grandest scheme of things, but we did see before then a trend up the way, and that would put you in for a really disgusting looking head and shoulders here between these 3 highs, with failure to overall actually continue to move towards the top side. So really, we do want to see this trend continue so that we can buck any of those sorts of problems and not let that happen. By buck I mean, like, you know, a horse that chucks it off the back. We don't want to see that actually continue to ride us and take us to the rodeo in terms of our accounts. Of course not. Instead, we want to see things continue up the way. Keys for doing that mean that we need to, of course, not break down past those key areas that we've already identified of the 50% and of course the 382. I don't want to see us coming in for a 618 golden pocket retrace. Whoops, sorry. I don't want to see us coming in for a 236 Fibonacci retrace. The worst that I would be willing to tolerate would be a golden pocket retrace, taking it from that previous low and looking in here and seeing that the golden pocket then, of course, as you could have guessed had you been watching this channel for quite some time, or indeed doing this technical analysis at home, would be where the 618 resides between the previous low, which we identified as being the real one, and then the actual following on subsequent high, which we're identifying right now as being much more real than this one. Going between those two zones, giving you that perfect, incredibly full-on assessment of the markets without even having looked at any oscillators or anything like that down below. But what are they saying down below? I hear you cry from the balconies around the world. And what we can see is, of course, the continuation of the bearish divergence here on the MACD that we identified before. It's the same overall scenario. Looking between this area and the previous one, you've got the Class B. Those are three Class A situations, and the continuation in terms of a lack of bullish, hidden bullish divergence when we're looking at our lows overall. That, of course, is not super fantastic. So what we really want to see is, of course, pushing on past this zone. Does it make a degree of sense then that we're experiencing that? And yes, it does, and we know that because we're right here at the most significant point in terms of the retrace from our highs that we had in August 2020 down to our biggest lows that we had back there in December 2020, and we've risen up very nicely since, overall in an upward trend. We've just had the golden cross here. Is it enough to say that this movement down upon the time of the golden cross, and don't be, you know, don't forget, I explained this in a great detail over there on the episode on Friday, that this 12% movement down the way was, of course, extremely likely to happen because of this golden cross looming over us. So far then, we've just continued to go up the way, putting us in an area where, when we jump down to a lower time frame, we're probably going to experience something along the lines of this TA. Now, you might be wondering as well, by the way, right now, why are you doing it like this, Rocky? Why are you giving such expert technical analysis out to a particular subsection of your audience? And there is a reason for it. It's because I want to deliver this to the TA, to Tezos, and help them all out in the world, because I love my old Tezonians out there in the world, and I'm just trying to be a good guy. Brilliant, right? So if you like the idea of that, then hit the thumbs up button. So we're on the 24-hour time frame. This doesn't look like anything much at all. We jump down towards the 12-hour time frame. We're starting to see something perhaps in here. We jump down towards the 4-hour time frame, and now we're really starting to see a particular picture start to emerge. And maybe it's a little bit unfair of me to be classifying it the way that I did initially. Now on the 24-hour time frame, you can see why I did that. We're looking at a high, and then just kind of failure to really to take out those areas with these wicks. Then when we go down the way towards the 4-hour time frame, we can see that we've actually had a number of body closures up very similar in terms of their height towards the top end. Maybe instead what we're looking at is something along the lines of a sort of ascending triangle from within the confines of our top end consolidation within the potential larger wedge, which could, if this were to break, form a parallel channel, or indeed could see us breaking the channel. Now, channel breaks don't actually have measured moves, but let me just do this one first off here and draw in. You can see that if we did break this towards the downside to some degree or another, the idea and the notion that what we'll be analyzing next week as this channel would, of course, be very, very, very clear. But what if we broke this towards the top side instead? We'd actually just be breaking the structure of the channel. Now, there's a couple of things that need to be pointed out here at this stage. It would be unfair of me to not be remiss of me to not point out that on this time frame that would actually perhaps just take us up towards the top end of what could be a channel. Let's consider this to be, in terms of massive trending movement at the top end for us, and that brings us back to the target, which really needed very little introduction earlier on the show, of course 382, like I already spoke about. It's nice to see everything coming together, isn't it? But if we do move on up past that zone, then we're looking at a couple of things happening at once, and we're of course breaking the area here. Now, I don't go in for channel break measured moves. I don't do this sort of thing. Instead, I tend to look towards, you know, just the general emphasis in the market being a resumption of upward trend in action, and you'd like to see that because of the 618. But let's be sure to be aware of the key area just above the 618, in there at the 380 area, where we have the 786 representing our fake out zone, and the top end of the pitchfork, where we also have the extension leading up the way if you were to be going into this zone, and that would be the general expectation anyway, as opposed to a full measured move, that we could trend up here with higher highs and higher lows along the way, with an ultimate target then thereafter of 446. And at 446 is where you get the craziness that happens that we've seen in numerous other altcoins. There'll be a lot of people coming here, and you would rapidly see Tezos rise up the old social rankings here from wherever it is currently positioned. In fact,